Good morning, ladies and gentlemen, and welcome to the TRANS-SIBERIAN GOLD PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send in the box below. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd like to remind you that this presentation is also being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand over to Stuart Dickinson from TRANS-SIBERIAN Gold. Thank you and good morning.
Good morning, everybody, and thank you to Investor Meet Company for arranging this. And it's nice to engage with you all. Apologies that Alexander Dorogov and Eugene Antonov, the CEO and COO respectively, are unable to join this presentation as they are doing some buy-side investor meetings with institutions and due to scheduling clashes are unable to make this presentation. However, I'll endeavour to go through this in sufficient detail for you all. So without further ado, we will start the presentation. There's a normal legal disclaimer which we would ask you to observe and start with a brief overview of who we are and what we do. So TRANS-SIBERIAN Gold is an AIM-listed company. It's been listed on the London Stock Exchange for some time and has a significant track record now of being the owner and operator of the high-grade underground gold mine at Asacha, which is in the far east of Russia in Kamchatka, and has been in production for 9 years. It is also the owner and developer of a second asset called Rodnikova, which the company purchased some 12 months ago. So we're focused on high-grade gold production and growth through exploration, not only around Asacha, the operating mine, but also with our second asset, Rodnikova. And we'll talk more about that later. So as I said, we are a producer, and for the first half of this year, we produced just over 18,000 ounces. And to give you some context, we produced just over 43,500 ounces for 2019 and have given guidance for 2020 of the range of 38,000 to 42,000 ounces that we expect to produce for this year. That remains unchanged in spite of all of the changes that are going on around the world and affecting all of us due to coronavirus and other macro events. So our guidance remains extant. And we will talk more about that later as well as the presentation progresses. So a little bit more about our company. We are majority owned by a group called United Financial Group Asset Management, UFG. They have been long-term supportive shareholders coming into the company in 2006, where they acquired a 29% stake and have subsequently increased their shareholdings through equity and debt participation and conversion. And more recently, we have been working constructively and carefully with UFG to reduce their holding to, as it says on the slide, around 60%. And that holding is held across a number of different funds, entities, and individuals, as it's a multi-asset manager with an established 2 decades of experience in Russia. So they know what they're doing. They are financial investors, which I think is really important because it means that we focus very much everything that we do as a business on generating financial and shareholder return. So we're unemotional in our decision making, rational and very objective, and that provides a high level of discipline in what we do, and we'll talk about that in more detail. As in addition to UFG, we've also attracted new UK institutional investors into the company in the last 12 months, and the most significant one being RAB Capital, and the second one more recently being Rayner Funds, also out of the UK. and in addition, retain long-term strategic emerging markets investors in the US, such as Firebird Investment Management. So it's a company which has institutional investments, high degrees of ownership from the directors and the board, and also a burgeoning smaller individual wealth management client base as well. We currently have 87.2 million shares in issue and retain 22.9 shares in treasury, which the company repurchased in May 2019, and they remain on the company's balance sheet. Just drawing your attention to probably the fourth item, which is probably the most interesting for shareholders, is that we have announced in conjunction with our our interim results a $7 million cash dividend, and that takes the total amount of capital repaid to shareholders in the last 4 years to be $40 million. And just to put that in context, that is somewhere around 40% of today's equity value of the business that has been repaid to shareholders in less than 4 years. So we're very serious about shareholder return. We unashamedly have a very high payout ratio. We have very high dividend yield, currently trading between 6 and 7%, and is also have a dividend that's well covered. And so we talk and act about having a sustainable dividend policy, which we do. I think I'll just move because the other points I will talk about in more detail as we go through the presentation. So just a word on gold. It is our, at the end of the day, it's our product. It's what we produce, and I think that's important. We're very, mining. We're very, very careful about. We produce a product which we have to sell at a margin. It's like any other business. So whilst there's lots of technical aspects to our business, it's actually quite simple and akin to many other businesses, which is we have a process by which we have to produce a product to sell to a customer profitably. And so what's the price of that product doing? As you can see, and you will probably be well informed, gold has performed extraordinarily well during our reporting period and subsequently, reaching all-time highs in August after the reporting period, but has suffered a little bit of weakness. But to put that in context, these are extraordinarily high prices, and I think it's consensus that the analyst community have of running around at 1885 consensus pricing for 2020. We run our models somewhere below that on a conservative base case. So we see still further upsides to the gold price, and therefore to our selling price of our product. And I think most commentators are unanimous on the favourable outlook for gold, particularly as the macro drivers which affect gold remain in place and will arguably strengthen. On the right-hand side, we've just illustrated the performance of gold against various other commodities and currencies to look at gold as almost as a new asset class for people as they're seeking to get exposure to it. And obviously buying the equities of gold producers is one way of doing it. Just a note on silver. Silver is the best performing commodity year to date and accounts for 3% of our revenue. So it's nice to have some exposure to silver, but we are a gold company. We often get asked about our byproducts and how we valorize them, and that's the answer. So turning our attention to the financial results, which we were pleased to publish yesterday at market opening, we generated revenue of some $30 million, which is flat year on year. And it's just worth noting that 2019 was a record year of revenue. Full year revenue was $63 million. So we have a run rate which is looking like or akin to last year's previous record performance. EBITDA, slightly down period on period as an absolute number, but as you can see, when this is adjusted, stripping out exceptional expenses and non-cash items, it does increase period on period. And really what it's worth just talking about that exceptional expense. It's not a sleight of hand by financial wizardry. it's really, we're just trying to make accurate comparisons period on period when we take out an exceptional expense, which does not reflect our underlying operational performance. And the exceptional expense was a $2 million claim, a settlement which we agreed with one of the Russian agencies, Rosneft, in relation to a claim which was made in 2016 about the classification of waste materials which we produce. It had been subject to some legal dispute, and actually the courts had found in favor of the company consistently, although recently had lost an appeal which had been lodged. So really the board came to a practical decision to seek an amicable settlement, as it's in neither the regulators nor ours interest to have protracted legal claims, and so we met with a settlement. That's not an admission of anything. It's a settlement where the claim now is full and finally dealt with, and to that end is not a recurring item, and hence we've used it. It is treated as an exceptional expense. So that's that, and obviously we've had some other depreciation, which I will talk about as well, which is slightly higher year on year. The key point here is that we are extremely cash generative. Our free cash flows are almost consistent with the full year for 2019. And that's really a function of, as I said at the top of this presentation, our focus on producing a product at a profitable margin. And you can see that in the numbers. And that profitability enables us to make our largest single dividend payment, which the company has made in its history. And a little bit more about dividends as we go on. But whilst we've been using the free cash flow to make dividends, we've also been doing two other key important things in our business. One is reducing our debt, and we have historically low net debt EBITDA ratios, and we're trading well below the industry average, which I believe is around 1 to 1.2. So we are under leveraged. We have high liquidity of cash on hand and also undrawn facilities. So we maintain the ability to expand our business and reinvest in our business, which is the second use of free cash which we've been using in our business, which is in these times in the cycle, we believe it is a good time to reinvest in our business to grow. And growth is an important part of our business. While we've been a steady state producer of 40,000 ounces for many years, we're really looking at what's next. And what's next is building out our resource base around Asacha, near mine targeting, as well as beginning to invest in our development project at Rodnokova. And I'll talk a little bit more about exploration as the presentation progresses. So really, when we're looking at our free cash and then our capital allocation, it is all driving around supporting two central themes, which is one of yield and maintaining high dividend payouts, and also growth through exploration and development. And that we believe that makes us quite an unusual stock in our peer group. And then just some operational metrics there around our levels of production, our grades, and our costs, which have increased period on period, and our gold production is slightly down period on period. And I think it's just worth saying why. And the reason is because this is a year of operational transition for us. And I think we've been very clear and consistent in our announcements to the market that we've been mining the main zone of Asacha now for 9 years. And we have the east zone, which is a higher grade ore body, which we are developing. And we are now in the process in 2020 of reducing the amount of mining, which is continuing at the main zone, because as you get deeper, the grades become more erratic and you meet some more technical challenges, but it's still economic and profitable to do that work. And at the same time, increase the amount of feed into the mill from the east zone, which is high grade, shallower, and so we do blend the ore from multiple sources at site to ensure that regular flow of gold coming out of the mill with high recovery rates of around 95%. So I've given a view about what we've been up to, and this is really a slide that says what are we trying to do going forward, and these have been quite consistent pillars which we found our business on, which is continue to enhance our operations. And what do we mean by that? Well, here it is, as I said, that year of transition into the East Zone, that higher grade ore body, and but also more tactical things, more lower level things, which is how can we be more efficient in doing things? How can we be smarter about doing things? And really try and make those marginal gains in all aspects of our business, because they do drive costs down. And the second piece is to then use that platform to look at growth. So our steady state production, trying to constantly improve it. We're then looking at growth. And here you can see in the last 12 months and the reporting period, we've had growth through the drill bit. And we have grown our business materially on the resources through successful exploration around Asacha, principally around Vein 25 in the East Zone. But also now, as we published and we'll talk about briefly, there are multiple other exploration targets around the main zone and the East Zone of our operational area. So we see further upside there. And the last leg of how we want to grow into the future is to look at other M&A asset opportunities. And that could be either assets, partnerships, or corporate transactions. And I think the key word there is selective. We have looked and been shown many, many deals. And the fact that we have not done many, if any, at the corporate level probably gives an indication of how selective we are. We have a great business, and we do not need to, we're not in the position where we need to do deals, and particularly in the current environment, overpriced deals. So we've been very cautious and shy on that. But all of those three aspects do lead into what we want to be our medium-term vision, to become a multi-asset producer, targeting a production of over 100,000 ounces per year. And we believe multi-asset is the way forward. De-risk your business, gives you multiple revenue lines, and also starts to give you scale, which gives you greater buying power, reduces your costs, and also gives you an equity re-rating typically as well. So that's what we're trying to do. But how do we measure what we're doing? And these are a quick gallop through some of our KPIs for the first half. And these are KPIs which we consistently review period on period and also year on year. And so if you track back through any of our reporting, you'll be able to look at these on a longer term basis as well. We don't chop and change what we're trying to do to make it suit for the next set of reporting. These are consistent. I think we've already talked about we've mined a little less ore in the first half. As I said, that first quarter Q1 production numbers were down. Again, that was really because we were focusing on the transition or starting that transition into the East Zone, and that's really caught us up in Q2, where we're almost on a normal run rate, and the run rate for Q3, as we've indicated, is consistent with Q2. So we're well on track for full year guidance. The realized gold price, as you can see, is dramatically up, and that reflects the macro environment which I talked about earlier on in the presentation. And so really, when you look at refined gold sales, what we've done is we've sold less gold at higher prices, and that's really what's happened. It's the story of the first half there, for the reasons I've outlined, as well as paid down debt. And really here, there's nothing really I haven't really talked about. Suffice to say that our costs have increased slightly year on year, and period on period rather, but full year guidance for all-in sustaining costs remains unchanged at somewhere between 900 and 1,000. So we stick a number in this presentation of 950, which still keeps us in the bottom half of listed gold producers. So the financials themselves and some other key metrics. So as I said earlier, our revenue of $30 million is largely made up of gold, 97% of gold sales. Our gold is sold to VTB Bank in Russia. They have a right of first refusal to purchase the gold from us as a condition of the lending arrangements which we have with them, and we have very supportive lending arrangements with them, and that arrangement has been in place for now many years and works perfectly well. We talked about our EBITDA, but again, still very healthy margins there, 44%, which is slightly higher than the average for the industry. I've talked about our exceptional expenses, which does result in lower profitability. We also have a higher depreciation charge of $7.7 million this year due to our resource calculations, our resource having decreased at the beginning of the year in January, and then subsequently increased as we had a very successful exploration program. And I think that's been reasonably well documented in our announcements. But, the underlying story here is that, strong net cash from operations of $12.3 million. And actually, when you look at free cash flow, as I said earlier, of around $9 million, that's the same as the full year for 2019, whilst at the same time paying down debt to a low leverage of net debt EBITDA of 4 and a 0.4 rather, and also reinvesting in our business in exploration, which I will talk about shortly. So because the business is in good health and because of the discipline that we talked about earlier, we have now become a very consistent return of capital to shareholders. And the slide you see there is really how we got to paying $40 million back to shareholders. As I said, just 30% of that's been cash dividend. Sorry, 30 million of that has been cash dividends, and 9.5 of that has been a share buyback in May last year, which has been really important trigger event because one, we were able to buy that stock back very, very cheaply, and so investors benefit from that, seeing sat on our balance sheet effectively at a net profit if we were to do anything with it, and also benefits from us increasing liquidity in our shares, in the trading of our shares. And as we've moved and worked really hard with UFG to reduce some of their ownership, increase the liquidity, and bring in new investors, we've really seen the liquidity increase dramatically over the last 12 and 6 months, and that's something we'll continue to work hard on too. So really the story is the $7 million dividend we've just announced. It's the largest single dividend we've made by the company in its history, and that results in a yield of, as I said earlier, around 6 to 7%, depending on where the share price is moving around to. All of that said, we still believe that the company is materially undervalued, particularly given our strong cash generation, our potential upside through exploration, which I want to come and talk about now. So we talked about the quarterly production numbers in the grey, but really what I'd like to focus in here is this bottom right-hand charts of the golden colour being our gold resources and the silver colour being our silver resources at Asacha, where we have upgraded during the period our contained gold and silver at Asacha in particular. What this doesn't show is also the million-ounce deposit, or million-ounce resource, which we defined on the Rudna deposit at 5.3 grams per tonne. The key message here is, through our reinvestment in our business, we have increased our resources in size, but we've also increased our resources in quality and confidence. As you'll see, the black line, is moving the measured and indicated category upwards significantly, which is higher confidence categories and therefore has higher surety of being able to be economically mined. And that's a really important piece as we move forward. So we are continuing to grow our resource base, and we do have further drilling planned for this year of 16,000 meters, having successfully concluded a 25,000 meters program through 2019 and the early part of 2020. That's not to say that operationally it's all been easy. We do operate in a remote area in the wilderness of Kamchatka, which is a 9-hour flight from Moscow. It's extremely challenging in that sense, and to that end, I think we regard ourselves now as almost wilderness experts. But it means that managing things like COVID things like supply chains in a COVID environment has been more challenging, and we have incurred some costs. But we believe a 0.7 million level of cost to maintain operations with minimal disruption has been a sound investment, and it's something that we keep regularly under control. The key metrics were published for the first half much earlier in the period, so I don't propose to talk to those in any detail. And just to remind and give some context here about what those first half production numbers and production performance looks like in a wider context, you can see that they look favourable. They're directionally going in the right way, and it's something that we would expect to continue as we average around about 7.4 grams per tonne over recent years, last 2 to 3 years, and it's something that we feel is achievable going forward comfortably. Just a word on exploration. That's the core shack there at Asacha, and the exploration has been really important, as I said, to not only grow mineral resource, i.e. that's our stock, if you want to think of it like that. That's a stock which we then process, produce a product of gold and sell it. So that's important. We've got more stock on the shelves and in the warehouse than we had at the beginning of the period, and I think that's super important. We also have, that's not to say we've got stock of inventory, i.e. Unsold gold. That's not the case. We sell everything on an extremely fortnightly or monthly basis, so it's to maintain regular cash flows. But also this exploration strategy of having rigs operational throughout the winter, as I said, in a wilderness area, is also giving us the upside through growth, i.e. defining more ounces of gold in the ground, and therefore being able to either produce more gold or prolong the duration of the operations at Asacha, which is still over 7 years currently. So we're reinforcing success, reinvesting in our business at a time when trading is favourable, and we expect that to have a similar effect as the previous drill campaign did. So we would be expecting the results to be fed back into our resource modelling, and we'll be announcing the results of that as they become available. It's something that we were particularly proud of with the Vein 25 North discovery, which still does remain open at depth, is we did it in a really cost-effective way. That discovery was made at under $12 per ounce, which is like a super cheap way of growing your business. So organic growth done efficiently drives value for shareholders. That is the East Zone of Vein, or particularly Vein 25 itself. And this northern area is that area which I was saying on the right-hand side is the area that we discovered very cheaply and is still open to the right-hand side, which is north, and also at depth. So potential to grow. We're doing something about it now. The drill rigs are turning, and news flow and results to follow on that. Well, but more widely, there still is plenty of upside around the mine. So the areas you can see marked number 1 and are to the north and the south of Vein 25. That's the East Zone there, but you can also see there's priority targets to the west of that. There's an infill between the main zone, which is that long red line with lots of grey hatching across it. But you'll also see priority targets all around, and this is all within a 3 by 4 kilometre square there. So it's all super near the mine, super near the infrastructure, logistics and processing plant. And we hope to be reporting the results of exploration, wider exploration, not only just drilling, in due course. So this is really just a summary slide of how we measure. Beginning of the year, we put out this presentation, or this slide, which is to say, look, this is what we want to do in 2020, and this is why. And as you can see, we're well on track for delivering on those priorities and enablers and progressing quite nicely. As I said, We can expect to update the market on the drilling, which still remains to be done, and expect to update the market on scoping study and prelim geological exploration of Rodmakova as well. And the key point here is everything that we do is designed to do one of two things: either grow our production or enhance our current production, which drives free cash flow and therefore dividends, or we grow our resources and development opportunities for future production and therefore creates value and growth for shareholders. So as I said, that leads into the investment thesis of TSG, which we believe is quite unique, is that we are a growth company underpinned by very healthy yields. I think that's probably a good opportunity to stop and take some Q&A.
Brilliant.
Thank you for your attention.
Stuart, thank you very much indeed. Ladies and gentlemen, please do continue to submit your questions. That's using the Q&A tab. Literally type the question in the box beneath and press send. But just while Stuart takes a couple of moments to review investor questions submitted, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that feedback is important to the company, and that immediately after the presentation has ended, you'll be provided with the opportunity to provide feedback in order that the company can understand your views and expectations. Stuart, before we look at any investor questions that have come in, there were a number that were pre-submitted, and if it's okay, I'd like to start off the Q&A with those.
Very happy to take those.
Thank you very much indeed. The first question we received is, what are the expected dividend payout ratios you're targeting?
So we don't have a formulaic approach to our dividend payout ratio. Our payout ratio is very high. It's actually one of the highest on the London Stock Exchange, but it does fluctuate. And it fluctuates for a reason, and that is why we do not have a formulaic approach. It fluctuates because we are a single asset producer, so we do have some risk to our business, and therefore the ability to pay dividends if something goes wrong. We also recognise that our business is inherently cyclical and does fluctuate quite quickly. So we do not target a particular number. We simply take an approach. We, taking into consideration our operations, taking into consideration the macro environment, we pay out what we can afford, when we can afford it, with the ability to still have capital allocation to the business for its sustaining operations, but also its growth operations. So it's looked at every board meeting in that, but we don't have a fixed payout ratio target that we must achieve on that basis.
That's brilliant, thank you. Next question, is there any scope to reduce the cost of production, or are you around where your target is to be?
Well, the answer is yes, there is. And it's something, as I said, we work hard on as the first leg of our strategy is to continuously improve the efficiency of our operations. As I said, this year, for this first half, our administrative costs have been higher. We have had COVID-related expenses. We have had legal and professional expenses related to the claim. We've had the claim settlement itself. So yes, all of those items we would expect to be addressed in the second half. And we're very fortunate that we've also had some other elements of cost reduction, notably the price of fuel, which people will see on that early slide where you see the performance of crude. Yes, there is continual fluctuation in our costs. We think there is downside to them, i.e. we can reduce them as we did last year. So yeah, we feel comfortable about that, and it's something we work hard on.
That's brilliant. Thank you. I think you touched on this throughout the presentation, but a question was received obviously pre your presentation. But could you expand on the mine development works at Vein 25? Have these progressed in line with your expectations? So I guess more about those expectations.
Yeah, it's a great question because it's a great question because it's the future of the business, or the near-term future of the business. And the answer is yes, we are super pleased with the way that's progressing. It's difficult. I mean, to bring any ore body into production is difficult, but we are pleased with that. And I think the way I can evidence that is if you look at the Q1 production numbers and then look at the jump into Q2. That is the evidence of more development being done at Vein 25 and more feed going into the mill from Vein 25 through bulk sampling, through test mining, all of that. We're able to run it through the mill and still maintain our production levels. So I think, yes, we are on track. We've signposted that very clearly. It is part of our transition this year, and I think we feel very comfortable about the way that's progressing.
That's great. Thank you very much. And I think the final question that we received before the event is, could you update us on the status of the claim from the Federal Service for Supervision of Use of Natural Resources over the level of payments required for the disposal of waste materials following a site inspection in 2016?
I hope I did cover this earlier in the presentation in sufficient detail, but just to be absolutely clear, that question relates to the Rosneft claim, and we paid and reached a settlement with them. As I said earlier, no admission of liability on either party. We've come to an agreement. It's paid, it's settled, the matter is closed, and we move forward.
That's brilliant. Thank you very much for that clarity. Now, I know obviously I haven't given you a lot of time, but there are a few questions that have appeared. If I could ask you just to look on the Q&A tab. Obviously, no investor can see another investor's question. Perhaps if I could ask you just to read out the question where it's appropriate and give your response, that'd be fantastic.
I'm very happy to, and thanks for the question. So, gosh, there's lots. So Abby has asked, what criteria do we have when looking at potential acquisition opportunities? That's a great question. We have a very clear matrix of criteria that we look at, and it ranges from a number of different things. So on a geographic basis, we'll be looking at where is it, what is it, and we'll be looking at things like, do we have an understanding of that particular region? Do we have an understanding of even that particular country? But I think just to talk geographically, Kamchatka is, we believe, a great place to do business or do our business. We believe there's significant exploration potential there. More widely, we believe the region's underexplored. And you can see elements of this in our exploration presentation, which we posted during the period. So we look there, is there synergies? Do we know how to operate? Do we have connectivity on a geographical basis? On an asset basis, we'll be looking ideally to try and find something in early stage production or advanced development. We will look at more greenfield opportunities where we think we can create value, such as Rosneft, where we took that asset back and in short order delineated a million ounce deposit there. That's a real value, a way of creating value. So we do look at these things as how can we create value. We also look at, can we digest them? Can we manage them? Are they of a scope and scale which would be either too small or too big? So there's a very clear matrix and tick box which every single asset or opportunity goes through, and it goes through a number of different people and filters before it gets to the board, before we then look at them. And I make the point again, we are extremely choosy and selective, and will remain so unashamedly. So if I turn my attention to the next question, which is from Robert, how will you finance Rosneft into production? Well, we don't know, is the simple answer. And nobody knows with any development asset about how it is going to progress. What we can say at this stage, like anybody who's an owner of a development asset in these circumstances, is we're doing the work. And the first deliverable to you and other shareholders will be the scoping study. That begins to put a framework around the development of that asset. So it starts to put in preliminary economics. It starts to make assumptions about logistics. It starts to make assumptions about the production potential of the asset. And then that really then drives what actually is the finance required to develop Rodmakova. And then once you know what the finance required is, I can then probably answer your question about how we will finance it. I think at this stage we feel very comfortable with we generate organic cash, so that some of that would obviously be used. We have existing headroom under existing facilities and a great lending relationship with our lenders. So we feel very comfortable about the ability to attract more debt. And I think we would just look at what the financing requirement is and indeed the operating environment at the time when we come to make those decisions about commissioning the mine at Rodmakova. So I'm afraid I can't give you the definitive answer just now. It's because the work needs to be done, and that is perfectly normal. But once we've done it, we'll tell you. And if I take I think what would be the last question, unless there's any more, is one from Jake. Are you seeing generated increased liquidity in the shares an issue with having such a major shareholder? And the answer is probably not, Jake. There is because we've worked hard to really increase our liquidity. We think that's beneficial for everybody. There are some trading days where it's unfortunate that it goes the other way. But on the whole, we've worked hard to increase the liquidity because we believe it makes our shares more attractive to a wider group of investors and gives the company more choices with how it may choose to use its listed securities. So I think at the moment I know our major shareholding groups are extremely pleased with increased liquidity and the way we've managed a migration of our register, decreasing their influence, which was very clearly set out when we did the buyback from funds which reached the end of its life, and rather have that stock kind of dumped on the market in a very unsophisticated way. We've been very intelligent, I believe, in managing those kind of situations for the benefit of all shareholders. So we've seen rising liquidity and a rising price over the last period.
That's brilliant, Stuart. And as you say, I think you've taken all the questions that have been submitted during the call itself. If any do follow on from this presentation, obviously we'll make those available to you for you to review also. I guess if I could then just ask you perhaps just to wrap up, and then I will divert investors to give company-specific feedback.
Just to say thank you very much for your attention. I know there are multiple demands on all of our time these days. So thank you for your interest. If there are follow-up questions and queries, we're very open and transparent and happy to continue the dialogue in a way that's appropriate. So thanks again.
That's brilliant. Thank you, Stuart. Could I ask investors not to close the session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, the feedback page will appear. If you accessed it via the link in the email sent to you, then you'll be asked to log in just to submit your feedback. And we very much encourage you to do that if you could spare the time. On behalf of TRANS-SIBERIAN Gold, we'd like to thank you for attending today's investor presentation. That now concludes today's session, and good morning to you all.